So Sea Limited reported earnings before the market opened today. Right now the stock is up around 11% or so, but overall the stock is still down 70% year to date and 80% since its all-time high. So you might say the business is much cheaper today, but maybe it was just so expensive before and right now it's just maybe the normal level. So we're gonna have a look at the numbers obviously, but the main reason why the stock is up 11% when I'm filming this during the day that might change is because they actually beat on earnings per share and beat on revenue as well. But as you will see, they actually lowered guidance at the midpoint for the full year with regards to their e-commerce segment. And they also removed full year guidance for the digital entertainment side, Free Fire, Garena, and for the digital payments as well. So a bit weird, but maybe we'll get more information on the earnings call. This video will be released before the earnings call, so if there is something special, I'll link it down in the description or in the pinned comment. So let's dive into this. Actually, before we dive into this, a little reminder of what happened last quarter. So maybe you don't remember, but last quarter they announced that they're closing down Shopee in France. And there was also this India ban of all games that come out of China, those games that are cloud-based, etc. And they included Garena Free Fire in that as well. That's also why it took a hit, well, a big hit, because India is a huge market for them. Unfortunately, in the earnings notes or something, I didn't find anything with regards to the India ban. Maybe again, during the call, they might mention something there, but if they had something to say, they would have probably written it down already. So if you're surprised at the slowdown, India is one of the main reasons, but the other reason is obviously, well, the reopening of the economy of the world, so people spend maybe less time playing video games. But as we've seen with other companies, that's not always the case. Now we can dive into the numbers. So first, a couple of notes from Forrest Lee. So he says here, we recorded solid results across our business in the first quarter of 2022, despite challenging comparisons to the same period last year during the heightened COVID-related restrictions. As a result, we are well on track to achieve our previously shared projections of profitability in our Asia markets, while continuing to scale our businesses and capture market share globally. Shopee and SeaMoney continue to enjoy operating leverage and efficiency gain as they scale and strengthen their market leadership positions. With the significant scale, strong leadership, and clear synergies achieved by both businesses in Southeast Asia and Taiwan, our consumer internet ecosystem in the region is naturally approaching a stage of long-term profitable growth. Right now, they're not profitable. The only side that is profitable is the gaming side of things. And again, this is a major concern. If the gaming side of things continues to slow down, maybe that will not be profitable either. But as of now, that's not the case. And it touches on Garena here. While Garena experienced headwinds in its growth post-COVID, we saw some preliminary positive effects from our efforts to improve user engagements in Free Fire. In particular, the monthly user trends for Free Fire began to show some early signs of stabilization towards the end of the first quarter. While this is encouraging, the long-term impact of reopening around Free Fire remains to be seen, and we will continue to focus on user engagement and user base stabilization. This is a bit like the Pinterest effect when we saw, well, quarter over quarter, that the monthly active users were going down and down. Same thing happens here, and same thing happened with a lot of companies out there. This is not specifically towards Sea Limited. By the way, if you want to support the channel, check out the link in the description to receive the top 10 best stocks to buy now, or visit fool.com/couchinvestor. Alright, so first up, total GAAP revenue that grew 64% year over year, and it's 64% over a great quarter last year, right? It's a huge achievement, and they beat estimates that were $2.8 billion, so that's nice. Obviously, the largest segment here is the e-commerce part. This is digital entertainment, and then the clear blue, let's say, is the smallest one, which is the digital financial services. And they break it down here in each and every segment. So the e-commerce GAAP revenue grew 64%. Yes, it's down quarter over quarter, but still up year over year quite nicely. Now for the DE bookings, that's also, it has been going down. And as they mentioned, this is because of the reopening and also because of the India ban as well. It's down 26% year over year, and it's been going down quarter over quarter since 3Q 2021. As for the financial services one, that keeps on increasing quarter over quarter, and year over year, it's up 360% year over year. And again, this is their smallest segment, so it's the one that will grow the fastest. Yes, these numbers are nice, but this is to be expected, to be honest. So as for e-commerce, I'd really like the presentation because it really breaks down each and every segment nicely and visually. So e-commerce gross order grew 71% year over year. Yes, it's down a little bit quarter over quarter, but that's fine. You don't want to see this downtrend continue, obviously, quarter over quarter for the next couple of quarters, but one quarter shouldn't really raise that many red flags. And again, it's still up 71% year over year. GMV grew again 39% year over year, as well quarter over quarter, down a little bit. As for the digital entertainment side, or Garena, so quarterly active users, that's down 5% year over year. And as you can see, since 3Q, it has been going down quarter over quarter as well. Quarterly paying users, that's down 23% year over year, and quite significantly down as well since 3Q 2021. Now they do give us some more information here with regards to Garena. So they recorded 2-year CAGR of 27% from 1Q 2020, the beginning of COVID pandemic, recorded a 2-year CAGR of 24% since that same quarter, and 10% paying user ratio in 1Q 2022, an improvement from 8.9% in that 1Q 2020. As for C-Money or digital finance services, you can see here quarterly active users grew 78% year over year. I believe last quarter year over year it grew triple digits or so. But then again, when you start off with triple digits and it continues like that, you cannot expect it to have every single quarter triple digit growth. It's still quite nice to see 78% year over year. Obviously, you do not want it to get reduced quarter over quarter, especially since it's still a small segment and a growing one, but still quite nice. Total payment volume, or TPV, for mobile wallet, that grew 49% year over year and just a little bit quarter over quarter. As for gross profit, that's up 81% year over year to $1.2 billion. Last quarter, that was $1.3 billion. So again, quarter over quarter, it's down a little bit, but then again, Q4 is usually a very strong quarter. And as for total adjusted EBITDA, so you can see here the big switch, right? The big blue box here, which was profitable, has now been decreased quite a lot, and that's the digital entertainment side. And the e-commerce part has become much bigger as well. Losses, that is not a positive thing. And this is why I said if the digital entertainment side does not recover quite quickly, you might see these losses increase. But overall, it's still a huge game, very popular. So I do see this thing stabilize over time and then continue its growth. As for net loss and net loss excluding share-based compensation, so again, it increased year over year, but actually it's much better than in Q4. So maybe a little bit of positive here. As for cash equivalents and short-term investments, it has been decreasing since Q3, but still quite nicely here, $8.8 billion, pretty solid. And now lastly, the guidance for the full year. They're not giving us guidance for next quarter, they gave us guidance for the full year. So now they only gave us guidance in e-commerce and GAAP revenue, and now they expect growth at the midpoint of 71.8%. The previous one was 75.7%. So as you can see, they gave us a bigger range, right? From $8.9 billion, now $8.5 billion to $9.1 billion. Because of the market environment, the world environment right now, they prefer to be a bit safer. But again, 71.8% year over year growth at the midpoint is quite nice. So to conclude, for a company that is trading right now at a price to sales ratio of 4x, growing over 71% year over year on the e-commerce side of things, granted, I believe this is a good bet for the future. Obviously, it will have to turn a profit sooner rather than later, especially in the e-commerce side of things. With regards to Garena, it remains to be seen if the bleeding has really stopped or stabilized in this quarter. We're going to have obviously more numbers in the coming months or so. So that remains to be seen. I completely understand people that want to stay on the sidelines right now. But in the future, this could become a huge successful and money printing company, since they are in, well, the digital services segment, e-commerce, which is still growing, and then gaming, which they have one of the most popular mobile games on the planet right now. Overall, good quarter. We're going to see what happens in the coming months if those segments become better and better. They expect it to become better. So let's see if they can execute on that. And obviously do share your thoughts down in the comments below. I will be adding C Limited to this channel portfolio. It's also in my personal smaller portfolio. You can check that out on stockcar.io. Link will be down in the description below. It's free to follow, so why not? And as always, if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.